Welcome back to The Exchange. Earlier in the show, B of A Securities' Savita Subramanian laid out her case for why you shouldn't buy tech on this dip. But my next guest agrees. He's sticking with it and even adding on the pullbacks. Joining us now to make his case is Jason Draho. He's head of Americas Asset Allocation at UBS Global Wealth Management. Good to see you, Jason. Obviously, we're experiencing a rebound today, but big tech, depending on exactly how you categorize it, has been in correction since midsummer. Why would you think this is an entry point, an entry opportunity?
Well, we like the sector, but acknowledge that the volatility is likely to remain given the concerns about export controls, given concerns or questions about AI monetization. But there are really kind of three factors why we think this is, opportunities when there are pullbacks to kind of add to some of the exposure. The first is that the earnings are coming through. We're getting the good earnings results. They may not be as spectacular as investors want, or they're not guiding higher, but the earnings results are coming through. The second factor is the AI CapEx investment story. We think that has a long runway, and actually there's probably upside risk to the AI, the CapEx story for next year. And the third factor is more from a portfolio perspective. These are quality companies, with good earnings, strong balance sheets. In an environment where there's macro uncertainty, we don't want to take too much sort of cyclical risk. We think these are the kind of companies that can kind of ride out through the macro uncertainty. Yeah. So you add up the micro and sort of the macro story. I think overall we think this is still, from a medium to longer term perspective, still an attractive sector.
It's funny you say this is a place to ride out the cyclical volatility. Savita's argument is that they are cyclical and that you should be elsewhere, like utilities and even real estate, to ride out that volatility.
Well, then I think if you're taking that perspective, then you're getting quite defensive on your overall view of the markets. Like you saw last week, that some of the defensive sectors certainly outperformed the cyclical. We think this is more of a secular story. The AI story is sort of secular. That's going to be somewhat immune to the macro story. And in fact, some of the sell-off we saw in the past couple weeks for the tech sector specifically, it wasn't tied to the unemployment issue or the job market data. It was tied to sector-specific stories. I think that gives us some confidence that it's going to be somewhat acyclical to some extent, more so than perhaps some other big tech companies, but they're not in the tech sector. They're in communication services, for example.
Yeah. And I mean, it is true that they have kind of morphed over time. So there's the question about cyclicality. There's also the question, and you alluded to it earlier, you think the AI investment cycle goes into 2025. Others aren't so sure.
We think part of the story and part of the results, coming out of it, for example, for NVIDIA, were some questions about supply side issues that we think ultimately will be temporary. The demand still is there. We think it has multiple quarters to kind of run through. Will this persist multiple years? I think that's more of an open question. But given the pipeline and given what we've heard from the companies, the issue is almost more their supply constraint rather than lack of demand. So short term, yes, there could be some sort of temporary questions about it. From an AI CapEx story, we think this has runway into next year.
Yeah, although again, there's sort of, does it have runway into next year, and then how much is that runway already priced in? So, and we're lumping it all together. I mean, there's a big difference between maybe an Alphabet and an NVIDIA in terms of what the biggest change points are going to be, and obviously a Tesla. What do you, if people look and they say, okay, the generative AI stocks are no longer outperforming the rest of the market, and that's a warning sign, would you broadly agree with that? Vis-a-vis going into kind of elsewhere in big tech or the Mag 7?
Well, so what we like within, let's call it big tech or the Mag 7, we're talking about like the tech sector specifically, which includes Apple, Microsoft, and NVIDIA. It doesn't include Tesla, which is consumer discretionary. So it's a specific call in the tech sector, not necessarily the Mag 7, because some of these other stocks, they are going to be more consumer-oriented. They are going to be more cyclical if they're more advertising-based. What we think is the beneficiaries of this generative AI CapEx story are going to be concentrated more in the tech sector specifically.
Right.
Certainly as the layer of the foundational layer of the investment is taking place. That I think still has as the runway. We have that's where we have kind of the more confidence in terms of these companies that could do well at these ones specifically.